Texas Instruments, ticker TXN, stock fell in the pre-market trading on Thursday after the chipmaker reported second quarter 2026 results that topped Wall Street estimates, but issued mixed guidance and announced a chief financial officer transition. Texas Instruments reported second quarter revenue of $5.46 billion, which again topped the analyst estimates of $5.25 billion. Earnings came in at $2.14 per share, ahead of the consensus of $1.92 per share, and that data is according to Benzinga Pro. Revenue increased 13% sequentially and 23% from a year earlier, driven by continued strength in the company's analog and embedded processing businesses. Gross profit rose to $3.4 billion, resulting in a 61% gross margin, while operating profit climbed 48% year over year to $2.3 billion. The company generated $2.7 billion in operating cash flow during the quarter and spent $514 million on capital expenditures. It ended the quarter with $7 billion in cash and short-term investments. Industrial revenue increased about 30% from a year earlier and 10% sequentially. This is supported by broad-based demand, as they told us. Automotive revenue grew in the mid-teens year over year and in the upper single digits sequentially. Data center revenue doubled from a year earlier and increased about 20% from the previous quarter. Within its business segments, analog revenue rose 26% year over year, while embedded processing increased 16% and other segments declined 2%. Personal electronics revenue was flat from a year earlier, but improved sequentially. Communications equipment revenue increased on both an annual and a sequential basis. Texas Instruments said AI infrastructure demand remains a long-term growth driver, with management expecting strong data center demand to continue as higher power server architectures require more analog and embedded chips. For the third quarter, Texas Instruments expects revenue of $5.65 billion to $6.15 billion, compared with analyst estimates of $5.61 billion. The company's forecasted earnings of $2.23 or $2.23 to $2.57 per share, and that's above the consensus of $2.15 per share. Texas Instruments said it continues to implement price increases amid strong demand while expanding its 300 millimeter manufacturing capacity. The company also announced that Julie Connect will succeed Rafael Lizardi as the chief financial officer following his retirement. We congratulate Rafael on his retirement. The pullback appears to stem from profit taking following the stock's nearly 70% year-to-date rally, rather than disappointment with the company's latest earnings results. Cautious pre-market sentiment across the broader market is also weighing on investor positioning. Remember, the NASDAQ futures slipped 0.32%, while the S&P futures lost 0.33%. Those have both accelerated to the downside, and that added pressure to semiconductor stocks. Texas Instruments remains well above its long-term trend levels. However, the recent pullback has left the stock under pressure in the short term as traders lock in gains.